I will cover the topic Islamic finance and religion. And my coverage of the presentation includes the concepts growth, development, religion, economics, finance, Maqasid al-Sharia, and financial system complying with Islamic rules, Islamic finance and Europe, and some examples from the literature. First of all, I wish to differentiate growth and development. Growth is purely quantitative, but development is mostly qualitative and covers the freedom of people enjoy and also levels of literacy and educational standards. Therefore, religion is more relevant to economic development rather than economic growth. Religion helps self-development of the people. When we differentiate economics and finance, economics is a social science. Finance is the science of managing funds, keeping in mind the time, cash at hand, and the risk involved. You see, finance is a micro-specific subject, but economics is a social science that studies the production, consumption, and distribution of goods and services. And there is a terminology, a term in Islamic literature called Maqasid al-Sharia. I guess this Maqasid al-Sharia also is relevant to other religions. The Maqasid al-Sharia covers 5 things. Those are faith, life, intellect, posterity, and wealth. Whatever ensures the safeguarding of these 5 serves public interest and are desirable, Ghazali says. The question is, do economics and finance help safeguarding of these 5? To preserve and enrich faith, we can make an inference. For example, fraud. Fraud can be considered as a sin. Sin damages faith, and regulations to prevent fraud safeguards faith. Recent developments in management brings us good governance, and under good governance we have COSO control environment, which aims to protect people from fraud. To preserve and enrich life and intellect. Everything done for economic growth and development to ensure adequate nutrition, clothing, proper upbringing and education for spiritual development, housing, a healthy spiritual and physical environment, medical facilities, and comfortable transportation. That means all these economic activities preserve and enrich life and intellect. Also, posterity is about demographic studies, which is under sociology and economics. To preserve and enrich wealth is the 5th maqasid. The economics covers this for acquisition of wealth. The economics studies the acquisition of wealth, and finance, management and maintenance and increase of wealth, therefore relevant to preserving and enriching the wealth. There is another terminology in Islamic literature, falah and hayat tayyiba, perfect and comfortable life. To achieve falah and hayat tayyiba, economic development is necessary, which mostly qualitative, and as well as economic growth, which purely quantitative. Economic and social development brings opportunity for education and health, rule of law, equitable distribution of income and wealth, and these are all bringing falah and hayat tayyibe. After I make an introduction with the conceptual framework, making some differentiations among the concepts, I will talk about financial system complying with Islamic rules. The characteristics of Islamic finance first requires no risk, no gain. Without risk, you cannot have gain. To get halal gain, you should have a risk. Therefore, trade and partnership replaces interest. Greater reliance on equity financing is one of the other characteristics of Islamic finance, and preventing excessive expansion of debt is another one, which is very popular in these days in economic and finance circles after global financial crisis. Institutions, markets, and instruments of Islamic finance can be adaptive or innovative, and markets which Islamic financial instruments are there are Islamic instruments are traded in conventional markets. There is no pure Islamic market. The Islamic financial instruments are traded in conventional markets. When we think about the theoretical foundations of Islamic financial system, in the bottom line we see wealth, ownership, and property rights. Over economic and social justice, over it prohibition of riba, over it reduction of information asymmetry, and in the top, risk sharing. Without these, we cannot talk about a perfect Islamic financial system. Especially after the global financial crisis, there is an interest in Western people in Islamic finance, and there is a trend of globalization of Islamic finance. There is increasing interest in Islamic finance from non-Muslim countries. Recent transactions include sovereign sukuk issuance by United Kingdom, South Africa, Hong Kong, and Luxembourg. These countries are issuing sovereign sukuk. Here you see a map, a world map, and there are three categories: systemic importance of Islamic finance, which is very important in those countries. But look at the second one, potential systemic importance over mid-term, given current growth. Most of the Western countries, non-Muslim countries, are potential systemic important for Islamic finance. That means the Islamic finance in those economies are becoming systemically important. There is a potential for growth of Islamic finance in many non-Islamic countries. Now I will touch upon the Islamic finance and Europe issue. There are motives that attract interest of European countries in Islamic finance. In Europe, there is a need for financial inclusion of Muslim minorities. Why? Because in Europe, there are significant Muslim minorities. You see here the maximum is Bulgaria with 13.4%. After that comes France with 7.5%. These are by population. Also, here we see the figures on a map. And here we see the economic wealth of Muslim minorities in Europe. For example, in Belgium, 30% of Muslim population is owner of real estate. In France, 8 billion euro halal industry is existing. In Germany, Muslims hold an estimated wealth in excess of 35 billion euro. In Italy, Muslims produce $42 billion. That is 2% of gross national product, GMP. And in UK, may have well over 5,000 Muslim millionaires with liquid assets of more than 3.6 billion. This is from Guardian newspaper 2002. The Muslim minorities as consumers in Europe has some demands from European economics. This depends on a survey in 10,000 Muslim professionals across 6 countries. 83% says search for and buy halal products. 86% response would be happy to pay more for halal financial products. 90% response would be interested in halal driving financial products. Also, we talked about interest of Europe in Islamic finance. Now, in other side, also Islamic finance industry has some demands from Europe. Demand for financial services from European countries by Islamic financial institutions. Why? Because Europe has an established market and strong experience, especially for sukuk issuances. The experience and reputation of European capital markets are required by Islamic financial institutions. Although the issuer and investors are in other countries, some sukuk are structured and offered and traded in EU markets, in UK, London, and Luxembourg. The issuer and investors are in Gulf countries, for example, but it is listed in UK, London stock market. Although the issuer and investors are in other countries, some sukuk are structured and offered and traded in EU markets. Also, very interestingly, in case of conflict, usually UK law is referred. What are the effects of Islamic finance on European economies? Some case studies outside the Muslim world appear to be becoming significant places providing Islamic financial services. London and Paris are the major examples. It seems likely that positive spillover effects between Islamic and conventional financial sector are probable. What are the benefits of Islamic finance to European economies? Islamic banks use commodity murabaha instrument for interbank lending transactions. Here, the bank which has excess fund purchases precious metal from London Metal Exchange, then sells. Deficit bank sells the metal in London cash. All these increase the volume of London Metal Exchange. There are especially European-based banks, these benefit, and sukuk traded in London and Luxembourg Stock Exchange are contributing to those economies. Here, lastly, I will give some examples of the literature and research. For example, there is a book, The Art of Islamic Banking and Finance, written by Yahya Abdul Rahman. He gives some evidences that riba, faiz, also interest is also prohibited in other religions. In chapter 2, he says, the title of the chapter is The Faith-Based Judeo-Christian Islamic Foundation of the Prohibition of Interest and the Riba-Free Banking System. And he explains the subject as an introduction to the Judeo-Christian Islamic Foundation of Faith, Judaic position of the charging of ribit, interest, money lending and interest in the Torah and Jewish tradition, the charging of ribit interest in Roman Catholic tradition, the charging of ribit interest in the tradition and teachings of the evangelical Christian church. Here we learn that all the religions prohibit interest. And I will give 4 examples of the research done regarding our topic. One of them is done by Mark Liu. The topic of the research is attitudes and perceptions towards Islamic banking among Muslims and non-Muslims in Malaysia. He concludes that the financial crisis that started in the West in 2008 has promoted Islamic banking proponents to renew their claim that Islamic banking is superior to conventional banking. While Islamic banking is lesser known banking system in the West, its potential cannot be underestimated in the view of the fast expanding Muslim population in many developed European cities. For a viable worldwide Islamic banking system, marketers need to measure acceptance among non-Muslims. Also, same research paper concludes that there is a significant relationship between religion and generation categories in the perception of the disadvantage of Islamic banking. There is a significant difference in perception of disadvantage between X generation Muslims and X generation non-Muslims. Another research paper is about perception of non-Muslim customers towards Islamic banks in Malaysia. And the research paper concludes that the result of the study showed that Islamic banking services are making headway among non-Muslims in Kuala Lumpur. Another research paper has titled Attitude and Patronage of Attitude and Patronage Factors of Bank Customers in Malaysia, Muslim and non-Muslim views. Both Muslim and non-Muslim have common perception in selecting their banks. The study appeared to suggest that in order to retain the existing customer and to attract new customers, banks have to look at the consumer preferences when determining bank selection criteria and should not only emphasize and rely on religion factor. Last research paper I will mention has titled non-Muslims' perceptions toward Islamic banking services in Saudi Arabia. The study concludes that non-Muslim customers in Saudi Arabia use the Islamic banking services because of cheaper costs, better quality, and nature of services provided by the Islamic banks. Avoidance of riba or interest is not the major motivating factor. Majority of the non-Muslim expat non-Muslims in Saudi Arabia customers are first exposed to Islamic banking at their places of work, where corporate Islamic banking products, services are utilized regularly by their employers. Thus, I tried to cover the concepts regarding this topic. Also, I tried to give some examples from European countries regarding Islamic finance, and some examples from the research and literature. Thank you for your attention.